Hey, welcome back. In today's episode, I'm going to run through this rather interesting article that I've come across from Forbes, which explains what blockchain can actually offer to enterprises and to individual investors. Now, we are hearing an awful lot about blockchain technology, real-world assets tokenization, Bitcoin, and a handful of other crypto tokens, which are built on top of these blockchain systems. So I felt it was very important that I run through this article to give you that deep dive understanding, because this is going to be a game changer, pretty much like the internet. Well, I see the same thing happening with blockchain, being that major disruptive technology that's going to play an important role in society at large in terms of how we manage our wealth, how we manage our investments moving forward. So without further ado, let's go through under the covers. The first one that you see here is blockchain for truth. I made a video on my channel recently that, for me, out of all of the various blockchain systems that are out there, Bitcoin, Ethereum, Solana, XRP, for me that stands out as the only truth network, blockchain truth network, is Bitcoin, because it's purely decentralized public blockchain system. In this point, blockchain for truth, what does it talk about here? Well, most companies, they always have an issue around trust because it's the most intangible asset there is. And why it's so important in their businesses, well, they want to portray a level of trust to their suppliers, to their employees, and most importantly, to their customers, in order to draw in the brand to the needs of the marketplace. This is governed by trust. Fair to say that trust can't be measured and hence can't be tested accurately. But in the case of truth, on the other hand, it can be assured and displayed to every stakeholder an enterprise interacts with through the use of blockchain. Now, this is very, very important because a blockchain system is none other like a ledger system that takes into account of the transaction that's come in and transactions that's gone out. That's pretty much what a blockchain system does in its simplistic form. But the important aspect is integrity, how we can assure ourselves, not just to our stakeholders, but to employees from a company standpoint who are going to be embarking and adopting these blockchain systems, how they can portray a level of trust over the transactions that they manage on their blockchain systems. This is the most important challenge that every enterprise and every market participant has. So this can be dealt with through a public blockchain, which enables that financial transparency, and particularly actors like accountants, auditors, non-profit organizations, and enterprises that can sometimes struggle to showcase the transparency of their financials despite a sincere commitment to doing so. This is an area where blockchain solutions are a ready-made companion to business efforts. This is important because, like I said, a blockchain is none other than a ledger system that tracks transactions that are committed to this public database for everyone to see, for everyone to verify, and for everyone to inspect with 100% veracity and accuracy that what they see in terms of transactions being committed into these blockchain systems, these ledger systems, is accurate and correct and cannot be tampered with, because the blockchains, particularly the public blockchains, are immutable, which means that it's mathematically impossible to change transactions. Once they're committed into the public blockchains, it's virtually impossible to unravel, to manipulate, which is very, very different from how an enterprise owned private database is, right? Because they are susceptible to fraud, manipulation in their corporate databases. Well, it's not the case with public blockchains because they're truly decentralized. And like I said in the outset, the most decentralized truth network, truth blockchain system there is Bitcoin. So that is, for me, one of the most important aspects that blockchain, particularly public blockchains, offer, in that it provides truth. The next point about blockchain for regulation. Now, it's true to say that there are different types of blockchain systems. So we have public blockchains, we have private blockchains, we have consortium blockchains. There is a different type of blockchain system to cater every type of market. So in the case of enterprises, they have a choice to either adopt a public blockchain, which I said is the most decentralized blockchain system there is, if you want to provide full transparency of their transactions to absolutely everyone, not just within the company itself, but to its customer base, to its supplier base, well, maybe a public blockchain is the ideal solution fit for those type of enterprises. But nonetheless, if there are enterprises that want more private blockchains so they can have full control over the transactions that they commit into their private blockchain systems, well, they have that option as well. But like I said, it kind of breaks the resilience aspect of the blockchain in terms of how it's originally been thought out as being completely open and transparent. Well, in the case of private blockchain systems, they're not, because it's under the control, under the auspices of an enterprise that implement these private blockchain systems. So from a regulation standpoint, which is noted here, this is ideal entry point for institutional adoption of compliance-ready blockchains, because they pave the way for banks, insurers, and even large investors who want to enter the space but do so safely. So this blockchain for regulation is an ideal fit for institutional adopters of the blockchain technology. Moving on to the blockchain for cost savings, well, for me, this is another important aspect because it certainly provides companies who are thinking about to integrate their operations onto the blockchains would certainly help cut down the cost element and reducing the prospect of fraud over the transactions that are committed into these blockchain ledger systems, and as a result provides increased transparency. It's not just from a cost perspective, but it provides full transparency, particularly if it's public blockchain systems. Important feature to appreciate there. And then lastly, blockchain for traceability. I have talked about that. The blockchains, it does provide open transparency. It provides other type of actors, not just within the company who are adopting this type of technology, but for the rest of the ecosystem, like their supplier base, their customers, even partners. It allows that market expansion of the blockchain technology to cover the interaction layer, if you like, with these different types of actors involved in the company's ecosystem in terms of positioning new products and services on the blockchain, for instance, or even the way that they interact with their end customers or their B2B customers through the same blockchain technology. Well, it really opens up the can of worms, if you like, to every type of actor in that company adopted blockchain system. And as a result, it enables to unlock new investment opportunities and certainly enables that wider adoption of the technology to accommodate different type of use cases, which is interesting. And that's what I mean by unlocking new investment opportunities. And for me, this kind of bakes in very nicely with the last point I want to make about real world assets tokenization, because real world assets depend on blockchains. So what do I mean by real world assets? Real world assets are like how we can digitize every type of physical analog asset out there that we can touch and feel and know about. So things like real estate properties, digitizing stocks and equities, digitizing even treasuries, bonds, even digitizing arts and collectibles, or even your favorite basketball team, football team. Those assets in the physical world that has an economic value attached, those are real world assets that can be indeed tokenized onto the blockchain. So you can see that the blockchain and real world assets are like that symbiotic partner that feed off each other. And if you plug the two together, it will paint a much more powerful, rather interesting investment narrative around real world assets built on the blockchain to provide value to society, to provide value to investors who would like to participate in these assets that's been digitized on the blockchain in order to make money out of it. So this is really, for me, like the next internet age evolution. It's an important area that you should do your investigation. You should do that research, because at the end of the day, when you're thinking about passing on your wealth that you've inherited and built during your lifetime to your heirs, it comes to a point where they're not going to be interested anymore on those physical assets, particularly those real estate properties, etc., etc. They're not going to be interested in gold. They're not going to be interested in yachts or vehicles or even expensive luxury items anymore that we are familiar with in the 20th century sense of the word. They're going to be interested in more of digitized wealth, digitized assets. That is where the wind is blowing. So that is all I like to say today. If you like today's episode, please don't forget to hit the like button, to share the video to colleagues and friends. And if you haven't done so, to please subscribe to my channel. where I publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.